Good morning and welcome to Bazaar Morning Call. I am Anuj Singhal, with me Prashant and Sonia, and of course we are starting the day today. The US market will be trading today. It was off of course yesterday, but if you look at what's been happening here, the big question is this some kind of a decoupling or just a phase of outperformance? I think there are arguments to be made for both. Since Jackson Hole, the Nifty is up 0.8%, the Dow Jones is down 4.8%, so that's a good 5% outperformance that we have seen, and year to date that number is 1.8% up for the Nifty, 14% down for the Dow Jones. So you could argue that there is some element of decoupling as well along with outperformance. Dollar index this morning has cooled off from the highs of 110 or so, so it looks like perhaps cues are positive once again. The SGX Nifty could do whatever, but like we saw yesterday as well, it didn't matter. The market was up well over 100 points. Let's see how things move. Hi guys, good morning.
Hi, morning Anuj, morning Prashant. And this is a market that has been outperforming for a while, right? I mean, you spoke about the Dow and how the Dow is down 14% compared to the Nifty up in the green. Look at the S&P 500, it's down 18% for the year. And even across markets, not just the US, I mean, in Asian markets as well, the Japanese market is down about 4%, while the Nifty is up almost 2%. So this outperformance, Anuj, this resilience, of course, domestic consumption has come back in a big way, whether it's travel, whether it's autos. Do you think this as a theme is something that the market can take forward and hold on to its resilience?
This popular saying that, Ramesh Damani used to always say, and I always remember, if it looks like a duck, swims like a duck and quacks like a duck, then it probably is a duck. Right, so it looks like, there are all the ingredients in place to tell you that at least on domestic front, we have a bull market. And if you look at the domestic sectors, most of them are at or close to lifetime highs. The market, of course, has momentum, and the bulls are in complete control of this market. You could make arguments about the market, why it should not be at the levels it is, but that's what the screen is telling you, and got to respect the screen. The data to watch from here on is the FI data in F&O, because there have been large amount of short positions which have been taken. I made this point yesterday as well. What if these shorts don't get followed through? Then the short covering itself will take the market higher. In fact, if you look at the index futures, yesterday was the first sign that maybe shorts are beginning to realize that this is not a market in which, the bets are working. The short bets yesterday were cut by 12,600 contracts. They're still short. If you look at the overall numbers, 72,000 contracts on the short side, net, long minus short. And the net positioning is 77% on the short side for FIIs. So, again, the same point, these shorts will have to cover at some point if the market does not violate a level. What's that level? The 20-day exponential moving average, which has been holding so far 17,460 is that base for the Nifty. Every time the market's giving you a dip, that has been the level which has been defended, and that's where a lot of traders have bought as well. The bank Nifty is actually at the cusp of a major breakout. If you get a close above 40,000, if you see the chart of the bank Nifty, you will notice that between 40,000 to all-time high, there's absolutely no resistance. So let's see. And of course, there's been a lot of action in the broader market, mid-caps and small caps doing well. You may argue that there's a bit of an exuberance, but again, going by the screen, it's telling you, it's, screaming that there's a bit of a bull market on right now in the broader market. By the way, just a number that I read this morning, the number of demat accounts in this country for the first time has crossed 100 million mark, 10 crore. That's the equity cult or retail equity cult that we have right now in the country. But Prashant, hi, good morning.
I mean, and that retail money is coming in, right? Both directly and through mutual funds as well. But through mutual funds, it's largely through SIPs, systematic investment plans, because if you look at the discretionary number, that has dropped quite a bit. I mean, I don't think we yet have the number for last month. We'll get that shortly. Let's just take a quick look at, a bunch of other things. So, no cues from overnight. So, it's, in a way, in that sense, a blank slate. And, bulls will draw what they like on the slate. So far, it's been up and up. Now, OPEC, the decision came through. There's a small cut. I mean, it doesn't even matter. I mean, actual production may not even change because of, the cut that we've seen, 100,000 barrels per day. But the fact is that they cut. They did not keep still, and that I think is the signal which many are taking it and making a big deal out of it, saying, well, they cut. Even after the US president visited asking for more supplies, the OPEC plus cut. We'll see how this one goes. The prices, I mean, oil prices shot up about 4% or so. They were at 93, they're at about 96 now this morning. but that one, the big 4.5% rally did fizzle out towards the end, but we're still higher than where we were yesterday. I think most of the hawkish impulse, at least this week, will come from Europe because the ECB meeting is on Thursday, and ECB is expected to hike by 75 basis points this week. I mean, I think that's now consensus expectations. So we'll keep an eye out on that. On the Nifty, the 61.8% retracement of the recent fall, the fall being from 17,992 to 17,166 is at 17,676. The market did not take that out yesterday. We put this out at about 2:30 or so yesterday. It was dancing around those levels, up and down by a couple of points, but finally ended under it. It would go in a jiffy with the momentum that we have on our hands. There are still, I think majority of the people that we speak to do express a certain amount of wonder in terms of what's going on here, especially because US is down. As Anuj pointed out, as we put out the data earlier as well. The Dow is one thing. Look at the outperformance, the fall on the Nasdaq, which is even sharper. The S&P, which is down about 6%. So, and the outperformance here has been just incredible. So, the point is, you don't argue against a very strongly trending up market till the market itself tells you that it's getting a little tired. At this point in time, there is little by way of any indication. Maybe the only sense of non-confirmation is that while other indices are making newer highs or very close to it, the Nifty is not. But that's just one kind of data point to track where most of the other data points are pretty bullish at this point in time. Will the global Q start to weigh at some point? What will that point be? I think those are questions which is on everyone's minds, but I think we'll only be wiser, of course, in hindsight. Sonia.
Oh, absolutely. And the SGX Nifty for now is indicating that the start will be a bit muted, although in the green, up almost about 20 odd points. The outperformance does continue, though, India versus most markets. So let's see if that's an ongoing theme. Over the next 2.5 hours, lots to discuss. So first up, on the equities front, we have Surendra Goyal of Citi, who says the surge in the European electricity prices owing to natural gas supply issues as well as looming recession risks has negative implications for demand for Indian companies, but there are potential competitiveness gains for certain domestic manufacturer exporters as well. An EU recession will negatively impact demand, but domestic manufacturer exporters might benefit on competitiveness, especially in high energy intensive and price sensitive sectors. In their coverage, Citi sees Balkrishna Industries, Aurobindo Pharma and PI Industries as potential beneficiaries.
Okay, let's get you some money market views then. Bhaskar Panda of HDFC Bank says that Russia shutting down gas pipeline to Europe has unsettled the markets as gas prices rise. Oil prices are a tad lower even as OPEC Plus cuts crude production. Back home, USD INR has remained under a bit of a pressure as Asian news flow has dominated. Today, he expects consolidation around the 79.75 pivot as USD INR pair trades in intraday range between 79.70 to 79.90.
Okay, and on the bonds today, Bhaskar Panda of HDFC Bank says that hopes for a global index inclusion and lower oil prices have helped Indian benchmark yields to soften a bit. But he says don't expect too much from here as the 10-year benchmark bond yield consolidates in an intraday range between 7.2 to 7.25%.